Now, traders at Access Bank say the T-bill secondary market is trading on an active note, driven by post-auction activities at the long end of the curve. We're also seeing some elevated yields on the back of sell pressure. Meanwhile, on the bond side, activities are concentrated in the belly of the curve, with yields on the 2031 and 2033 maturities reaching highs of 16.2 and 16.1% respectively. Anthony Aigbokhan, Treasury Team Lead at Access Bank, joins me now for more market movement. Anthony, thanks a lot for joining us on the show today. Busy week we've had so far. Walk us through the highlights of market movements, starting with Tuesday's OMO auction and then the details of Wednesday's bond Treasury bills auction.
Okay, thank you very much, David, for having me. Starting with the OMO auction happened on Tuesday. So the central bank sold over 800 billion at this auction. We saw rates close at 19.5 and 19.4 and the short and the long respectively. What we've seen after this auction, we've seen activity in the OMO market, but it has been sort of selling activity. We've seen rates after around 19.2%. We've seen a lot of activity on the March OMO papers, which are currently at 21%. In the Nigerian Treasury bills market, there was an NTB auction on Wednesday, where the central bank sold over 300 billion across the standard maturities. We saw a bit of increase in the stop rates, with 90 days at 15.3%, 15.5% and 16.14% across the 90, 180 and 364-day paper respectively. We've seen a lot of activity post-auction. We've seen a lot of selling offers across the curve, particularly on the shorter end, where we've seen the rates currently at 15% levels.
And let's also touch around liquidity as well. Now, the expected CR maintenance today, how will this impact liquidity going forward?
Yes, market liquidity closed at over 3 trillion yesterday. However, the market is not as liquid as this liquidity seems to show, as the liquidity seems to be focused around some particular banks and is not spread out. We've seen OPL and overnight rates currently at 24.5 and 24.86% respectively. Today we expect the CBN to conduct a CRR maintenance, which would also reduce this liquidity further, and it's the lower or tight liquidity that we are seeing that is also driving the selling pressures across the NTB and the federal government bond space.
And we're seeing demand remain sticky, especially on the short end of the bond curve. But walk us through some insights we should expect from next week's bond auction, your take around the subscription and likely allotment strategy.
Okay, next week, Monday, there's going to be a bond auction. The DMO is going to offer over from 120 to 150 billion across the 2030 and 2032 papers. We expect the rates to hover around similar levels where the last one closed, where rates closed at 16% and 16.2% respectively. On the bond side, we've seen a lot of activity on the belly of the curve, particularly the 2032s and 2031s being the most actively traded papers. We've seen these papers trade around similar levels at the auction, trading at around 16.2 and 16.3, with the 2031s also trading around 16.4. So going into next week, we expect the bond auction to close around similar levels, around 16.2 and around 16.5% respectively on the 2030s and 2032 papers.
And wrapping up the conversation now, let's talk about details in the FX market at this moment. We're seeing the support from the FPIs and also local participants looking at the recent appreciation of the local currency. But for you, how do you see the Naira perform in the new week?
Yes, we've seen a lot of activity from the foreign portfolio investors. This has largely been driven by the OMO auctions that the CBN has conducted. We've seen the CBN conduct up to 4 OMO auctions this month alone. So that has brought in a lot of foreign portfolio investors into the foreign exchange market. We've also seen some local participants supplying dollars in the market. So this has more or less allowed the Naira to strengthen. We saw the MFM rates, the official CBN rates, closing at 1460 levels. Going into next week and also into next month, there's going to be a lot of UMO maturities in next month. We have over 3 trillion maturing next month, so we expect to see a lot of foreign portfolio investment participation. We still expect to see a lot of dollars coming into the Nigerian market, as the carry trade of buying the naira and selling the dollar is still very, very profitable. We've also still expect the CBN to always come in to stabilize the rates when if they see the rates depreciating beyond levels that they don't feel comfortable with. Currently, we see that level currently being at around 1470 to 1475. So if we see rates going towards those levels, we expect the central bank to come into the market to sell dollars, which they haven't really been doing that much over the last 1 or 2 weeks, because there has been relatively stable supply from the foreign portfolio investors and the local suppliers.
Okay, Anthony, we'll leave the conversation here for now. Thank you so much, and do have yourself a wonderful weekend. That was Anthony Aigbokhan, Treasury Team member at Access Bank.